Okay, so this is still about Home Development Mutual Fund, and we'll be focusing on their financial statements. All right. So again, it's a GOCC, government-owned and controlled corporation. So they're required to provide their financial statements, financial reports to the public through their websites mostly. So we have here their quarterly financial statements as of September 30, 2020. This is their latest, and then the audited FS for 2020 I think is not yet available. I think they have until March 15 to provide the report. And then I have here their audited financial statements for December 31, 2019 with comparative statements for 2018. Alright, so let's look first at their quarterly report for last year. My cat is climbing the shelves. Just a minute. Alright, continuing on, so we have this, they have their assets, cash and cash equivalents, 5 billion, investments, 38 billion. So this is current assets, so these are short-term investments. And then they have receivables, 222 billion. This climbing. Whatever. Okay, and then we have other current assets, 356 million. I'm going to record him for a bit and then, put the clips of my pet videos. So I took a video of the cat and then I temporarily sent him out of the room. Okay, where are we? Alright, current assets. So the investments here and the receivables are short term. And then the total current assets, we have 266 billion. So that's a lot of money. And then we have the non-current assets held for sale. They provided it separately, 1.2 billion. And then for the non-current assets, they also have investments and receivables. These are long terms, okay? The terms are more than 1 year. 47 billion, 307 billion, respectively, for investments and receivables. And then we have investment property, 17 billion. Property and equipment, 1.4 billion. So again, these are being used for operations, the buildings, the land, equipment, software, office equipment, vehicles, that kind of thing. And then they have intangible assets, 194 million. And then we have other non-current assets, 1.5 billion. That's still a lot of money. Okay, total non-current asset, 375 billion. And then total assets, 643 billion. For the liabilities, current, financial liabilities, 64.9 billion. We're going to check with the notes to the FS, but I think, I don't have an idea of what this is because I already know where the contributions are. So, what kind of financial liabilities are these? We'll see later on. Interagency payables, due to BIR, and then for their employees, the contribution, employer's contribution to, including the employee's contribution as well to GOCC. So this is for GSIS, PhilHealth, and of course Pag-IBIG as well. Trust liabilities, 2.6 billion, provisions, 1.7 billion, and then other payables, 1.6, total 71 billion. And then they have non-current liabilities as well, deferred credits or unearned income, so 8.9 billion. Okay, and then they have the equity. Retained earnings, 76 billion. Cumulative changes in fair value, 2.9. I believe this is good, because their investments, the changes in the fair value of their investments are in the positive, 2.9 billion. Okay, compare more with the SSS, which is in the negative. We have members' equity, 484 billion. Total equity, 536. Total live and equity, 643. Okay, what I like about the presentation of the HDMF is that the members' contribution are actually presented in the equity section. Alright, they are not being treated as, in SSS, what they did is that, the contributions, all the money that came in, less the amount that have been paid to the members as well, only the net of that went into the members' equity. Okay, but as you all know, I'm of the belief that it shouldn't be that way. Although, of course, it's different kind of thing because they're insurance. But for HDMF, so we have the members' equity coming in, and then they put it in the members' equity item, and then any disbursement, because it's essentially just a withdrawal of the savings and the credited earnings or dividends to those accounts. So whenever there's a claim for the provident fund, they deduct it from the members' equity. And then the earnings, retained earnings, so they are also investing the contributions from the members. Any earnings, okay, deduction, any earnings, and then they simply deduct their operating expenses. So the net surplus or the net profit, net income from their yearly operations. So over the years, they had an accumulated retained earnings of 76 billion pesos. All right. And of course, the dividends, the income that's been distributed to the members. So I believe those have been credited or transferred to the members' equity account. All right. So this is a statement of financial position of HDMF. Next, we have the statement of comprehensive income. So their income, service and business income. Again, this comes from the investments or the borrowings or the lending operations of the fund. So 28.6 billion. And then you have your shares, grants and donations, 11 million. Gains, 5.6 billion, and then other non-operating income, 677 million. Total, 34.9 billion. Again, this is for the 9-month period from January to September 2020 only. For the expenses, they have personal services, 3.2 billion. Maintenance and other operating expenses, 3.7. Financial expenses, 10 million. Non-cash expenses, 6 billion. So the non-cash, mostly, depreciation, amortization, allowance for losses, if any. Okay, mga uncollectibles with regards to their receivables, the lending, from the lending activities to the members. Net income, 21 billion. Other comprehensive income for the period, 5 billion. So total comprehensive income, 26 billion. That's a lot of money. They're very profitable. Statement of changes in equity. So you have here members' contribution. So all the contributions coming in from the members, they're credited to the members' equity. Alright, and then you have your comprehensive income for the year. Changes in fair value, so addition, retained earnings, it's added to that. And then you have your dividends, transferred from retained earnings to the members' equity. Okay, because it's being credited to the account of the members. And then you have your provident claim. So if the fund has matured, or if the member has retired, or have met any of the conditions that would allow him to withdraw his savings, his TAV, total accumulated value. So these are the claims for the year, 16 billion, so deduction from the members' equity. And then you have your adjustments from the retained earning, offsetting of total TAV, so deduction from the retained earnings and the members' equity. Hang on. Is this on this? Other adjustments. So this is one account. Alright, so these are deductions. Okay. What would be the offsetting of the AB? So, you have your members, they have their savings, and then in cases that they are unable to pay off their loan, so what the fund does is that they deduct the outstanding balance of the loan from their TAB. So that's one possible reason for this, the deduction from members' equity. Okay, so balance at the end of the year 2019, 521 billion. And then for the current year, September, so members' contribution, 31 billion. Income for the year, so addition to the following accounts, changes in the fair value and then the retained earnings. Dividends, so transfer from retained earnings to the members' equity. And then you have your provident claims, 9 billion. And then the offsetting of the AB and other adjustments, so you have 19 million to the retained earnings, and then deduction of 5.5 billion from the members' equity. So balance at the end of September 30, 2020, we have 563 billion pesos. Okay. I like the presentation, of the members' equity. And then we have statement of cash flows. So from the operating activities, loan repayment, short-term loans, so 22 billion. Loan repayment and user and institutional loans, 41 billion. Interest received, 260 million. Cash receipts from customers and employees, 661. Proceeds from sale of held for trading investments, 804. Short-term investments. Proceeds or placement from matured time deposits. So this is in parentheses. So these are placements. So it means the fund or the money has been invested to mature time deposits. Loan releases, short-term loans. So members have borrowed money, so they gave out the cash to them. Loan releases and user and institutional loans, 34 billion. Cash paid to suppliers and employees, 12 billion. Acquisition of held for trading investments, 1 billion. Okay. Cash paid to suppliers, so probably their expenses. And then the employees, we've seen earlier, around 3-point-something billion. So net cash used in operating activities, we have 43 billion. And then from investing, we have proceeds from sale of AFS investments, 22 billion. Acquisition or rollover of AFS, 1.2 billion. Placement of equity, 500 million. Acquisition of PPE, 60 million. Acquisition of intangibles, 5 million. Okay, so net cash provided by investing activities, 21 billion. Cash flows from financing activities, so proceeds from members' contributions, 31.3 billion. Provident benefit claims, 9 billion. So net cash provided by financing activities, 21.9 billion. Okay, so net decrease, 913 million. And then you have your adjustments, deduct, what's this? Effect of exchange rate changes on the balance of cash held in foreign currency, so 2 million in the negative. And then cash and cash equivalent beginning, 6.2 billion. So the cash and cash equivalent ending is 5.3 billion. Okay, so these are the financial statements for the quarter, from January to September 2020. Okay. And then we'll look into the audited financial statements for the year 2019 with comparative statements from 2018. Okay, so this is from the Commission on Audit. Again, there are independent auditors' reports since they're the official auditor of GOCCs and other government agencies, actually. Okay, so for the Home Development Mutual Fund, these are the report. This is the report, their opinion. We have audited the accompanying financial statements of HDMF as at December 31, 2019 and 2018, which comprise the statements of financial position, comprehensive income, changes in equity, and statement of cash flows for the years then ended, and notes to financial statements, including a summary of significant accounting policies and other explanatory information. In our opinion, the accompanying financial statements present fairly, in all material respects, the financial position of HDMF as at December 31, 2019 and 2018, and its financial performance, cash flows, and changes in equity for the years then ended, notes to financial statements, including a summary of significant account policies in accordance with Philippine Financial Reporting Standards. Okay, so this is an unqualified opinion. So basically, what they're saying is that they found no issues, and they present fairly in all material respects the financial position, performance, cash flow, changes in equity, and the notes. Okay, so basis for opinion, this is pretty much a standard. Responsibilities of management and those charged with governance for the financial statements, auditors' responsibilities. Okay, report on other legal and regulatory requirements. Those are basically standards. Okay, so they have the statement of management's financial responsibility for financial statements signed by the chairman of the board, CEO, and the vice president of finance group, basically the treasurer. Okay, so we have the statement of financial position for 2019 and 2018. So current assets, Cash, so from 2018, from 8.9 billion to 6.2 billion. Investment, so I think this would be new, 4.6 billion. Receivables, there's an increase from 158 to 173 billion. Other current assets didn't change much. It didn't change much from 254 million to 285 million. Total, so it increased from 167 to 184 billion. Non-current assets held for sale, it decreased from 2.2 billion to 1.6 billion. So they probably sold some of it. And then non-current assets, we have long-term investments from 46 to 54 billion. And then the receivables, long-term as well, from 294 it became 339, from 2008 to 2018 to 2019. And then we have investment properties, it increased as well from 17 to 20 billion. Property and equipment, so from 1.3 billion, it only increased to 1.5 billion. I think it's not much, only around 200 million. Intangible assets didn't change much as well, 221 million to 270 million. Other non-current assets, so it decreased from 2 billion to 1.1 billion. Overall, the total assets increased from 532 billion to 603 billion. Okay, so if you're going to rank SSS lowest total assets, and then we have Pag-IBIG and then SSS with the highest, we'll see how much is in the PhilHealth later on. Liabilities, current liabilities, financial liabilities from 40 billion to 67. Okay, I'm very curious what are the components of this. Interagency from 89 million to 196, it's almost doubled. Trust liabilities from 3.3 to 3.2 didn't change much. There's a slight decrease. Provisions from 761 million to 2.2 billion, it increased. Other payables from 1.1 billion, it decreased to 893 million. Okay. And then for the non-current liabilities, deferred credits or unearned income, it decreased from 10 billion to 8.5 billion. Okay. Total liabilities, it increased from 56 billion to 82 billion. Equity, so we have retained earnings increased, of course, from 80 to 86. Cumulative changes in fair value, so from negative 12 billion, it became negative 2 billion, so that's a good thing. Members' equity, 408 billion, it increased to 436 billion. Okay, so we're going to see how much would be the net change for this year, 2020. So as we all know, we have the new situation that occurred in 2020, the pandemic. So we're going to see how how the different government agencies dealt with the situation and how their finances have been affected. Okay, but as soon as they issue their financial statements, we're going to create a commentary on them. Okay, so total equity increased from 476 billion to 521. Total liable equity, okay, 532 to 803. Alright, and then we have the statement of comprehensive income. From 2018, their total income, service and business income, 41 billion to 45 billion. The gains also increased from 5.7 to 6.4 billion. Other non-operating, so this one decreased from 5.1 to 4.6. But in total, it still increased from 52 billion to 56 billion, right? And then their expenses, personal services didn't change much, just a little, from 4.4 to 4.8 billion. Maintenance and other operating expenses also didn't change that much, from 6.3 to 6.9 billion. Financial expenses, I like how the figures between the items here are somehow consistent, didn't change much. Okay, financial expenses 5 billion to 3.8. Non-cash expenses from 8.8 to 10.7. Okay, so in total from 19 billion to 22 billion. So the profit around the same figure, 33 to 34. Net assistance or subsidy, almost the same, 1.4 million. And then you have your net income, and then your other comprehensive income. So in 2018, it's negative Okay, so this is a loss, 7 billion, and then currently it's 10 billion. I think this is in relation to the changes in fair value of the investments. And then you have your comprehensive income from 26 million to 44, billion. 26 billion to 44 billion. All right. And then we have the statement of changes in equity. So from 2018, we've seen this from the previous report. And then we have your 2019. I think what we've seen earlier is the 2019 actually. So we have the members' contribution, 50 billion, comprehensive income for the year. With regards to the cumulative changes in fair value and the retained earnings, and then you have your dividends transferred from retained earnings to the members' equity, and then you have your deductions for the provident claims, 16 billion, offsetting of, total accumulated value and other adjustments. So we have these deductions from retained earnings, deduction from members' equity. Okay, sorry again. So the ending balance of the equity is 521 billion. At the end of 2019. Okay, and for the cash flows, we have, again, operating activities. Collection of income or revenue, 36 billion from 35. Collection of receivables, 59 from 52. Proceeds from matured investments, wow, 615 billion from 373. Trust receipts, 429 million from 254. Other receipts, 6.7 from 5.5. Okay, so the total cash inflows from operating activities, 718 billion from 466. Okay, and then of course they're going, most likely they used the cash inflows to invest again in other securities for them to have higher earnings. Okay, so for their cash outflows, they have payment of expenses, 9.1 billion, purchase of inventories, 111 million, grant of cash advances, 39 million, prepayments, 23 million, refund of deposits, 11 million, payment of AP, accounts payable, 60 million, remittance of personnel, benefit contributions, and mandatory deductions, 3.1 billion, grant of financial assistance or subsidy or contribution, 556,000, grant of loans, 123 billion, purchase or acquisition of investments, 620 billion. Okay. And then you have your other disbursements, 5 billion. Total cash outflow, 761. Okay, so the net cash used by operating activities is 42 billion. Okay, so sorry, this is cash inflows. I thought it's the net cash used in operating. That was wrong. So this is the total cash inflow for operating, cash outflow for operating. So net cash used is 42 billion. Alright, and then we have cash flows from investing activities, cash inflows, cash outflows. They provided a distinction. Proceeds from sale or disposal of investment property, 387 million. Sale of investments, we have 9 billion. Receipt of interest earned, 2 billion. Receipt of cash dividends, 7,506. Proceeds from sale of other assets, 803,000. Okay, so total cash inflows from investing activities, 12 billion. And then for the cash outflows, purchase or construction of investment property, 4.3 million. Property and equipment, 379 million. Purchase of investment, 6 billion. And then purchase of intangible assets, 91 million. Total cash outflow, 6.6 billion. So net cash provided by investing activities, 5.6 billion. From the financing activities, we have the members' contribution, 50 billion. Cash outflow, claims for provident benefit, 16 billion. So net cash provided by financing activities is 34 billion. And then you have your decrease in cash and cash equivalents, 2.6 billion. Effects of change in exchange rate, negative 30 million. Cash at the beginning, cash and cash equivalents, 8.9 billion. So since we have the decrease, so the ending is around 6.2 billion only. Okay, so that's for the year 2019. So we now have the notes to financial statements. Again, the first part would be corporate information about the Home Development Mutual Fund, the laws related to their establishment, and then what do you call this? Okay, and then the other related loss with their operations, some sort of history on how they came into being, and then approval of financial statements. Okay, a summary of significant accounting policies that they applied in the preparation of their financial statements, in the recording of the transactions that they have in their agency or organization. So we have all this. This is going to be a lot. Okay, I'm going to skip. Let's go to the very particular, the breakdown of the items presented in the financial statement, the face of financial statements. Okay. Okay, I think I used lumampas. Where is the cash? Okay, I think. Okay, so we have the cash and cash equivalents. So the breakdown: cash on hand, cash in bank, local and foreign currency. And then you have your cash equivalent. So these are the breakdowns. Investments, we have financial assets at fair value through profit or loss, 4.4 billion. Other investments, 200 million. Non-current, so you have FA at fair value through other comprehensive income, 54 billion. Okay, and then what do you call this? Additional details to understand what those types of investments are. And then they have the fund started investing in LEFMs. Total investments stood at 4.5 billion with a market value of 4.4 billion and losses of 79 million. Okay, so they invested in BPI Asset Management, BDO, Phil Equity Management, Metropolitan Bank and Trust Company, and then Atram Trust Corporation. So equal amount of investments at 900 million pesos each. Okay. I like how they're not showing favoritism, alright? That they're actually tried 5 different investment companies. Okay. Fair value through OCI, it's also broken down into the following: treasury notes or bonds, corporate bonds, dollar-denominated bonds, and investment in stocks. They're very, what do you call this? They're very conservative. They didn't invest a lot in stocks. Okay, essentially the bonds are, what do you call this? Guaranteed return, whatever interest is provided on the bond certificate. So that's what you're going to get. As for stocks, of course, it would be dependent on their market value. If it goes up, then you get a profit. If it goes down, you incur losses. Okay, so I think that's why they did invest a lot in bonds instead. Okay, they wanted to protect the people's money, so they didn't want to incur a lot of risk. Okay, or take on a lot of risk. So for the receivables, we have mortgage or sales contract receivable, loan receivable, interest receivable, accounts, and then other receivables. And then allowance for impairment loss, they really could not escape the high amounts of these, 39 billion for HDMF. And then deduction, current receivables, 173, so the non-current is 339. Okay, and then you have your details about these different types of receivables. Okay, borrowers, collecting agents, others, insurance claim due from other officers and employees, receivables, disallowances, charges, others. Okay, and then other current assets, prepayments, inventory held for consumption, other assets. Non-current assets held for sale. Okay, there are no distinctions, but basically these are it. Investment property, no distinctions as well, but they provided for the additions, reclassifications, adjustments, reversals. Alright. With valid appraisal, with lapsed appraisal. Property and equipment. So you have your land improvements, building and other structures, machinery, and equipment. Intangible assets, they have software licenses. Mostly they account softwares, accounting, or I'm not sure. other types of systems that they are using. Other non-current assets, restricted funds, deposits, other assets. So they have your member savings reserve fund, time deposit, local currency, life and non-life insurance coverage as contingent trust fund. Okay. Funds held in trust, trust and officers liability fund. Okay, financial liabilities. Oh, really? Accounts payable 63 billion, insurance, reinsurance 3 billion due to officers and employees 5 billion, interest 0 2019. I'd like to know what the accounts payable are. Amount due to members. These represent TAV which have reached their maturity at SPF date but have not been withdrawn. Oh, okay. So essentially, they already reclassified it from members' contribution. They deducted it from there already. And then they transferred it to a liability account. Because essentially, the members can claim them already. Okay. Good. Good presentation. Interagency payables due to BIR 121 million, other government corporations 53, GSIS 16 million, NGAs, PhilHealth, SSS 1 million each, around 1 million each, due to Pag-IBIG 919,000, due to LGUs 149,000. Okay, withheld for employees compensation, collections for servicing and accounts management agreement, due for remittance, trust liabilities, customer deposits payable, guarantee security deposits payable. Okay. Provisions, leave benefits payable 747 million. That's a lot. Other provisions 1.4 billion. I'd like to know what the other provisions are. Didn't explain much. Other payables, undistributed collections 878 million, unclaimed balances 14 million. Okay, collections, but they have not been credited to the individual accounts or applied to the loans that they are payments to. Yeah, because again, sometimes there would be payments that without the correct member's ID or incorrect name or other things, so they do not get credited or debited to the account of the person who paid them. So undistributed collections, that's a lot, 878 million. Deferred credits or unearned income, deferred credits 7.8, and earned revenue or income 676 million. Represents the capitalized interest income on restructured housing loans which are credited to interest income and penalties upon amortization every month, and rental payments on foreclosed properties. Okay. Under the redemption period or rent-to-own arrangement. Service and business income, fees and commissions income 375 million, processing fees 286, other service income 90 million, so you have 752. And then you have the business income. Interest is the largest source of income, so 39 billion. Income from acquired foreclosed assets 3.4 billion. Fines and penalties 1.5 billion. Okay, and then you have your rent, dividend, and other business income. Okay, and then explanation on the different types of income source. Gains on sale of investment property 5.7 billion. Gain on forex 214 million. Sale, redemption, transfer of investment 160 million. Changes in fair value of financial instruments 9 million. Gain on sale of property and equipment 3.8 million. Other gains, revalued MCR, SCR, redemption of auction properties, revalued wholesale loans. Okay, so those are the items, gain accounts. Other non-operating income, reversal of impairment loss, from receivables and others. And then miscellaneous income, 1 billion, that's a lot. Okay. Personal services, salaries and wages, other compensation. You have your bonuses and incentives. Okay, I'm going to have to question this. You have your regular salaries and wages 1.8, but then your bonuses is almost 60% of that 1.2 billion. What are these from? What are these for? Personal economic relief allowance 89 million, health maintenance 84, overtime, night pay 81 million, representation 47, so rata 47, clothing 22 million, cash gift 18, longevity 17, quarters allowance 11, others 184. Okay. Total 101.8 billion. So it's, all the other compensation is almost the same as the regular, salaries and wages. Personal benefit contributions, Provident Welfare Fund 814, retirement 216, PhilHealth 21, Pag-IBIG 4, employees compensation 4 million. Other personal benefits, terminal leave, so 104 million, other personal benefits 11 million. Okay, so the total 4.8 billion. Not bad, but this is the part that I'm going to question. Maintenance and other operating expenses, general services 2.9, litigation, rent, confidential intelligence and extraordinary expenses, supplies, probably in a credit or background investigation, supplies and materials expense, software charges, utility, communication, members benefits, professional, probably appraisal, actuarial, or things like that. Travel expense, repairs, trainings, fees and commission expense, survey, research and development, printing, publication, taxes, insurance, other fees, loyalty card expenses, other maintenance and operating expenses. Okay, so not bad, 6.9. It's not much, and also I think it helped that there was actually a limit provided in the law, 2% of the net asset value from the previous year. General services, okay, additional information. So you have your financial expenses, management supervision, trusteeship fees, bank charges, that's a lot. Billion, 3.8 in total. It's only million. 3.8 million. Non-cash expenses, the largest would of course be impairment loss. Again, majority of their activities or source of income is on lending money to the members, so it's really expected that there would be impairment losses. And then losses 1.8, depreciation 774, amortization 42 million. Okay, so total 10.7 billion. Members equity, okay, already discussed a bit of this from earlier. Cumulative changes in fair value breakdown, bonds and other debt instruments, bond and other debt instruments, stocks and equity securities. Okay, from negative 12 to negative 2, so not bad. There's a reverse, not exactly reversal, but recovery of loss. It's still lost essentially 2.1 billion, but at least the loss decreased from 12 billion to 2 billion only. Okay, net unrealized gains or losses, it's that value 2.1 billion. Retained earnings reserved for future claims, of course, when the members are able to qualify for the withdrawal of their provident fund. Appropriated and unclaimed balance, dividends, donated surplus. And then you have your supplementary information about the taxes, duties, and fees. This is in accordance with a revenue regulation from the BIR, so they're only complying with it. Related party disclosures, okay. For their key management personnel, 42 million. And then for, what's this? Maintenance and other operating expense, 48 million. Wait, what? Didn't understand much of it. What's the difference? Personal services, maintenance, and other operating expenses. Okay. Co-ownership of Atrium of Makati condominium building. So they invested in this. And then you have your risk management. Again, fund from the people, from the general public. So they're required to have this risk management and how they are going to ensure that they protect the value of the contributions from the members. Okay, because that's the main point. Okay? They have to protect and ensure that it's going to grow for the benefit of the members as well. Okay, so they have the risk management, liquidity, operational risk, market risk, capital management policy. Then you have your events after balance sheet, dividend declaration, all that. Okay, so that ends the financial statements. Okay, we've seen the financial reports, financial condition of Home Development Mutual Fund, or more commonly known as Pag-IBIG Fund. Alright, so that's it for this one. Thank you and bye.